Last week, SoFi investors were expecting good news, and the company was widely predicted to be added to the S&P 500 index, but instead it got left out. And now a lot of people are saying that this is just a small bump in the road, and honestly, I think the stock price suggests that that might be true. But I actually think there's something much more interesting happening underneath the surface of this entire fintech space right now. Because while I was on X recently, I actually saw a lot of people debating SoFi versus Robinhood, but there's another company making moves that almost nobody was talking about. It's a digital bank with 131 million customers who just received conditional approval to establish a national bank in the United States. And that company is called Nubank. And when you step back and look at the numbers, you start to realize something pretty interesting. There's actually multiple different fintech models all starting to collide. So instead of just debating SoFi versus Robinhood, I think the real conversation investors should be having right now is bigger than that. So by the end of this video, we'll answer the real question investors care about: which of these stocks should you own or sell? But first, this is not financial advice. I am not an advisor, and this is just how cash works. And also, please help the channel a little bit by clicking the like or subscribe button if you like these types of breakdowns. I really do appreciate it, and it helps the channel a lot. All right, we're gonna go to my computer so I can present this better and show you how these companies actually really line up to each other. Okay, so here's the spreadsheet I've created to compare Robinhood, SoFi, and Nubank, and where I feel the winner lies in all of these companies. And so we're going to start with an easy one. We're going to start with the number of customers. I'm going to be comparing a bunch of different metrics down below here quickly so that I don't bore you to death, but I think by the end of this you're going to see really a real winner standing out, okay? So when you look at the numbers, the scale difference here is pretty obvious. Robinhood still has the larger US base with around 27 million funded customers, which is roughly double that of SoFi, which has 13.6 million members. Now, that advantage mostly came from the huge wave of retail trading during the pandemic, when millions of new customers opened brokerage accounts. But the real outlier here is Nubank, where they're working across Latin America, and it's operating a completely different level of scale. They actually have nearly 5 times Robinhood's user base and almost 10 times larger that of SoFi. So to be fair, these numbers aren't perfectly apples to apples because Robinhood counts funded brokerage accounts, SoFi reports members across its platform, and Nubank counts banking customers. But even with those differences, the takeaway is pretty clear here. When it comes to sheer scale, Nubank is in a completely different league right now. So the winner here based on these numbers is Nubank. But now let's move into some more interesting numbers where we get into the growth rates. So looking at the growth rate, we can see Robinhood is roughly around 7% year over year with a revenue growth rate of 30% year over year. SoFi has a 35% compared to 15% at Nubank. So SoFi is a bit of a different story here. Member growth is still one of the fastest growth rates in fintech right now. And the company is still early in the build out of its ecosystem. So every new product they launch is helping bring in more people into the platform. And they also have guided around 38 to 40% EPS growth for the next year. So this is actually the winner here when it comes to growth is SoFi. Now, Nubank sits somewhere in the middle with about 15%, and it's not as fast as SoFi, but when you're already serving more than 130 million customers, even that pace means millions of new customers every quarter. But one thing to note is once Nubank does start to extend into the United States, we will likely see some dramatic growth rates in the US alone since it's just starting out in the US. So if you're looking at momentum, this round clearly does go to SoFi. Okay. Next section now is revenue per user, which is interesting. And this really matters for the business model, and that's how much money each platform actually makes per user. Now, when you break down the numbers, SoFi clearly leads this category. On average, SoFi generates about $265 per member per year on its platform, which is significantly higher than the other two platforms. Now, that's largely because SoFi's strategy is built around cross-selling multiple financial products. A customer might start with a loan, and then open a checking account, start investing, and eventually add a credit card. So every product increases the revenue coming from that same user. Robinhood sits in the middle at roughly $165 per customer, and that revenue mostly comes from trading activity or interest on customer cash and margin lending. The challenge with their model is that it's a bit more cyclical. So when trading activity slows down, revenue can slow down too. And then you have Nubank on a pure revenue per customer basis. It's the lowest, around $124 per customer per year, but that's partly because Nubank has focused on reaching a much broader population across Latin America, including many customers who are newer to the banking system. So their strategy has always been scale first and monetize later. So if you're judging strictly on how much money each company makes per user, this round again goes to SoFi. Now, here's a metric I almost never see people talk about, and let's go into that now. So instead of looking at total market cap, we break it down per customer, basically asking how much is the market valuing each user on the platform. So in this case, when you look at it this way, the picture gets pretty interesting. Robinhood users are being valued at about $2,600 per customer. SoFi is next at roughly $1,700 per member, but Nubank is way lower. Even though Nubank has already massive scale and billions in profit, the market is only valuing those users at about $550 each. So I think this means investors are basically saying a US fintech customer is worth 3 to 5 times more than a Nubank customer. Now, some of that probably comes down to geography and income levels, but it still raises an interesting question. Is Nubank undervalued for the scale it has, or are the US fintech platforms just priced for a lot more perfection, or is there more money to be made in the US? So these are some questions we need to ask ourselves. But in this case, I've given Nubank the win here in this section, but some might argue differently on this particular metric. So let's move on now to the cost structure. This is where Nubank gets really interesting. Their platform costs about 80 cents per customer per month to run. That's incredibly low when you compare it to most banks and even most fintech platforms. So while Nubank makes less revenue per user today, their operating costs are actually dramatically lower. So that means that they can scale to hundreds of millions of users without needing huge margins from each one. So in this case, the winner is Nubank, and midpoint here is SoFi. Let's now move to the PE ratio. Nubank is trading roughly 25 times trailing earnings, as you can see here, and about 17 times forward earnings, which is actually the lowest of the three. So I forgot to mark this one, but we will go ahead and give it the win here in terms of the cost basis. But Robinhood sits around the mid-30s, while SoFi's trailing PE looks a little higher because its profitability is still ramping up. So on a pure earnings basis, Nubank actually looks like the cheapest stock here. But let's remember that there is a lot of growth still happening here in these other names as well, especially SoFi. So let's look at a better number here, and let's look at the price to sales, because it gives us another way to compare how expensive these companies actually are. So Robinhood trades at the highest revenue multiple by a wide margin, and investors are paying a big premium for that platform. Nubank sits in the middle, but SoFi actually is the cheapest when you look at this metric. So we need to mark that as a win here, because really it's the cheapest when you look at the revenue relative to the market value. So if you believe SoFi's ecosystem strategy continues to scale, this is where the valuation argument gets interesting right here, with a 6.7 times price to sales ratio compared to 10.2 on Nubank and 16 on Robinhood. That brings us to the next obvious question. Based on these numbers and some of the other things happening in the industry, who is the clear winner here when it comes to buying or selling these stocks? And first of all, I do want to say that I do own the stocks already, the SoFi and Hood stock. But I also want to acknowledge that there are other companies, before wrapping this up and telling you what I'm doing with my stocks, you should know about these other platforms. And here's an example. We have Chime here, one of the competitors. Now, these aren't nearly as big when it comes to what SoFi is actually doing, but it's something that, you know, as an investor, we should be aware of. Then we also have Cash App, which is another big one coming in here. and we have the Money Lion as well. Each control different pieces of the fintech ecosystem, of course. So this isn't a winner-take-all market where only one app is going to survive. Now, the US system in itself is massive, and there's room for multiple platforms to succeed here. But when you look specifically at the full financial ecosystem, where it includes lending, investing, and cross-selling and everything else, for me, SoFi is still one of the most complete platforms, and it's being built in the US today for US. And the company already has the bank charter, the deposit growth, and the cross-sell engine starting to work. So that combination is what allows financial platforms to become extremely profitable over time. Now, Nubank is clearly an incredible company here, and the US market, though, is much different from where they originated in Brazil. For example, the US market is already heavily banked, it's extremely competitive, and it's much more regulated. So I'm not looking at Nubank as an immediate threat to SoFi in the United States. What I see instead are two very successful models developing in very different areas. So for investors, that's why I don't necessarily think you have to choose just one company, whether it be Nubank or SoFi or one of the other apps out there. Like I said, I own Hood and I own SoFi, and I don't plan on selling them anytime soon. So the real story here isn't Robinhood versus SoFi, and it's really not SoFi versus Nubank. The real story might actually be that the entire banking industry is slowly being replaced by these digital platforms. And we're still very early in the chapters of this shift. So 10 years from now, which platform do you think controls the primary financial relationships? And that is the question we need to answer. And I'd love to hear your comments on that, so please post down below. Also, don't forget to subscribe if you like these breakdowns. For me, I am currently going to be holding my SoFi. I don't need to buy any more currently. I did get in rather cheap back in the $9 days. Also for Hood, I just recently got into Hood. Now, I'm not buying a lot in that stock, but I am currently looking to purchase maybe some of the Nubank stocks as well. So for me, the bottom line is I'm very bullish on SoFi, and I'm sticking to the story here that I really do believe that they will come out in the lead in the end of all of this. So again, thanks for watching, and I'll see you in the next video.